Welcome to our video on how to invest in the stock market for beginners. Today we're going to be discussing the ultimate guide to the stock market, and we'll be taking inspiration from one of the most successful investors of all time, Peter Lynch. Whether you're a beginner or have some experience in the stock market, Peter Lynch has some valuable insights that can help you make better investment decisions and achieve your financial goals. In this video, we'll be discussing some of Lynch's strategies that you can use to build a successful portfolio and make informed investment decisions. Peter Lynch is a legendary investor who is widely regarded as one of the most successful investors of all time. He managed the Fidelity Mellin Fund from 1977 to 1990, during which time the fund's assets grew from $20 million to $14 billion. Lynch achieved an average annual return of 29.2%, which is one of the best records in the history of investing. Lynch is known for his simple and straightforward approach to investing, which is accessible to beginners and seasoned investors alike. His philosophy is based on the idea that individual investors can use their everyday experiences to find great investment opportunities. Lynch believes that investors should focus on companies they understand and invest in companies that have a competitive advantage in their industry. In his view, investing is about buying great companies at a reasonable price and holding on to them for the long term. Investing in companies that you know and understand can also help you stay invested for the long term. When you have a personal connection to a company, you are more likely to have confidence in its future prospects and be willing to hold on to the stock even during market downturns. This can help you avoid the temptation to sell your investments during periods of volatility, which can lead to lower returns over time. Additionally, investing in companies that you know and trust can be a great way to build a diversified portfolio that reflects your personal values and interests. By focusing on companies that align with your beliefs and priorities, you can create a portfolio that is both financially and personally rewarding. While investing in companies you know is important, it's not enough to base your investment decisions solely on your own experience. Lynch emphasizes the importance of doing your research before making investment decisions. This includes analyzing a company's financial statements, understanding its business model, evaluating its competitive position in the market, and keeping up with industry trends. By doing your research, you can determine whether a company is undervalued or overvalued and make informed decisions about when to buy or sell a stock. Additionally, staying up to date with industry trends can help you identify emerging opportunities and potential risks that could impact your investments. Investing in companies with strong growth potential can be a great way to build wealth over time. However, it's important to remember that growth stocks can be volatile and may not always perform as expected. Lynch advises investors to look for companies that have a sustainable competitive advantage and a clear path to growth. This means investing in companies that have a strong management team, a solid financial position, and a clear strategy for growth. By focusing on these factors, investors can identify companies that are likely to succeed over the long term and potentially earn a higher return on their investment. Lynch's advice to avoid timing the market is based on the idea that short-term market fluctuations are unpredictable and can be influenced by a variety of factors, including economic conditions, political events, and investor sentiment. By focusing on buying great companies at reasonable prices and holding on to them for the long term, investors can benefit from the compounding effect of their investments and potentially earn a higher return over time. This approach also allows investors to avoid the stress and uncertainty of trying to predict the market's movements, which can lead to poor investment decisions and lower returns. In conclusion, Peter Lynch's investment strategies are a valuable resource for beginners looking to invest in the stock market. By investing in what you know, doing your research, looking for growth opportunities, and avoiding the temptation to time the market, you can make informed investment decisions and build a successful portfolio. Lynch's approach to investing is based on common sense and a long-term perspective, which can help you achieve your financial goals over time. We hope this video has provided you with some useful insights and tips to help you get started in the stock market. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more investment tips and advice. Thank you for watching.